If you own a property in the UK and you're thinking about buying a second home, maybe a holiday home, then this video is for you. We're going to talk through the mortgage implications of borrowing against a second property. We're going to do this by answering the top 10 questions our clients typically ask us when they're thinking about buying a second home. How do we get a mortgage for a second property or holiday home in the UK? The application process is very similar to if you're buying your first home or indeed subsequent homes. The key thing here is for the lender to ensure that they believe the mortgage is going to be affordable given your current commitments. So what they'll do is look at a full income outgoings assessment. So they'll work out from all sources of income what your net income is each month. Then they'll look at all committed outgoings. So that might be things like the mortgage payment on your existing residential property. It might be other credit commitments like personal loans, car leases, that sort of thing. They'll look at your family situations, whether you're supporting any dependents, and kind of work out from there what they believe your surplus income is, so net income minus outgoings. From there, they'll kind of work backwards to say, okay, well, if you've got this much money coming in each month that's kind of surplus, then we believe you can borrow X amount on your second home. So the key thing with second properties is basically ensuring that, that the second mortgage you're about to take out is affordable. The rest of the process is fairly standard, so they look at doing evaluation of the property, make sure it fits their criteria, all those kind of checks. The key one is the affordability element. What's the difference between a mortgage for a second home or holiday home and a holiday let? Well, the key difference here is your intention for the property. Second home or holiday home is for your use, whereas a holiday let, the intention is to buy as an investment and rent it out. Some holiday let mortgages give you the option where you can actually stay in the property for a number of weeks of the year, whereas with a second home or a holiday home, the idea is that that is your second property. You're not going to be renting it out to paying customers. So those are the key differences. The way the application is treated is that for second homes, holiday homes, the mortgage needs to be affordable based on your own earned income separate to the property, whereas with holiday lets, they assess the affordability of the mortgage based on the rental income or the holiday let income that property is likely to produce. How much deposit do I need for a holiday home mortgage in the UK? It comes down to individual lenders and what their criteria are. But at this point in time, October 24, you can do it with as little as 10%. If you wanted to include other elements like having repayments on interest only, for example, to keep the cost down, you might need a larger deposit. If you're borrowing larger sums, then lenders typically have larger deposit requirements. So it all depends on what you're looking to do, how you're looking to set up the loan, and of course the point in time you're looking to do it. Can I use rental income from a holiday home to help with mortgage payments? So lenders won't include any income that's to be generated by the property in their affordability assessment for a second home or holiday home. They'll want to make sure that you can afford those mortgage payments just from your earned income and you're not relying on the property to generate income for itself. Most lenders on residential mortgages, and that includes second homes or holiday homes, won't allow you to rent the property out. There are a few exceptions. At the moment, Barclays and Nationwide are kind of the obvious ones that will allow you to rent the property out for a certain number of days a year through sites like Airbnb. This is October 2024, these things do change. But generally speaking, most lenders won't allow you to use the income generated by the property for affordability, and in actual fact, it won't allow you to rent it out at all. So you need to be able to afford it from your own earned income. Are mortgage rates higher for second or holiday homes than standard residential mortgages? No, they're not. So the products you have access to would be the same sort of standard residential range from the lender that we're looking to apply to. They don't load the rate or the fees for the fact that it's a second property. It's just standard residential terms. Can I remortgage my main residence to pay for a second or holiday home? Yes, you can. If you've got sufficient equity in your property, you could refinance that, take the equity out to buy a holiday home, either in full or to use as the deposit, then that's absolutely fine. As we discussed on the affordability piece, the new lender will need to ensure that the affordability of both loans fits, and they'll assess that based on the increased borrowing from your main residence if you are looking to take some. So just something to bear in mind there. Do I need to notify the lender if I'm planning on renting out my second or holiday home? Most lenders won't allow you to do this. There's only a few key players at the moment, like Barclays and Nationwide, that actually allow you to rent the property out, and it's only for a certain period. Typically kind of 90 days within the year, you can rent it through sites like Airbnb. If you're not with one of those lenders, then you won't be able to rent that property out. So that's something to bear in mind. That's the kind of short-term lets. If you were looking to rent the property out long-term, for example, 6 months to a year, you may well be able to get permission from the lender to do that. It's the same for kind of standard residential mortgages on your main residence. If you have a change in circumstances and there's a need for you to rent that property out, you can approach the lender and ask for permission to do so. It's not guaranteed that they will allow it, but some will, as long as there's a good reason. They might lower the rate and therefore increase the rate slightly to cover the extra risk. It all depends on the lender and your situation. What are the best mortgage options when buying a second or holiday home? Well, what we would always advise is to make sure the loan is set up on the most appropriate terms for your needs. So it's kind of a full understanding of the client, what they're looking to do, the reasons behind that, and making recommendations accordingly. What we do find is that with second or holiday homes, we do a lot of mortgages on an interest-only basis. So you're only paying the interest on the loan each month, not repaying the capital, which obviously brings down the monthly payments quite significantly in some cases. A lot of clients prefer this just because it gives them a bit more flexibility. The commitment's not so large. The fact that your main residence, if you've got on repayment, for example, is going to be paid off at some point, there's less concern about paying off the mortgage on a second or holiday home because it can always be sold at some point in the future to redeem that loan. How does owning a second or holiday home affect my existing residential mortgage? Well, initially there'd be no change, so there's no obligation from you to notify your existing lender that you've taken out this extra mortgage, this extra commitment. However, when you come to refinance the property, if you're looking to move to a new lender, then that commitment will be factored for that income and affordability assessment. So you might find your options are slightly limited if you then have this additional commitment. Some lenders might deem the loan on your main residence to be affordable, some might not. So it might kind of impact what you can do in terms of refinancing the main residence. However, you always have the option of sticking with the existing lender, so they'll always offer you a product transfer rate without any kind of further underwriting or valuation. So there'll usually be an option for you, but you might find you're restricted in which lenders you can use. Are there specific lenders that offer second or holiday home mortgages in the UK? Not necessarily. There are some lenders that usually won't offer mortgages on second homes, so obviously need to avoid them. But the majority of mainstream lenders will offer mortgages for second residential properties or holiday homes. The criteria around that does vary. So as an example, some lenders will have a higher loan to value bracket, so you might be able to borrow more relative to the value of the property and put in a smaller deposit. Other lenders might be a bit more favourable in the way in which they treat the commitment of your existing residential mortgage. So some lenders will just look at the monthly payment you're making now and factor that into their income outgoings affordability assessment. However, some will look at your mortgage that you already have on your main residence and stress it. So what they do is assume a higher rate of interest than you're currently paying and therefore a higher monthly payment to ensure that affordability fits in the long term if rates do change. So there's different lenders treat the application slightly differently, might be more favourable than others, but generally speaking, most will offer mortgages for second or holiday homes. So those are the top 10 questions that our clients typically ask us when they're thinking about buying a second or holiday home in the UK. If there's anything you think we missed, feel free to drop a question into the comments and we'll look to answer it. Alternatively, you can obviously give us a call and discuss your personal circumstances. And also feel free to have a look at the other videos on the channel. Lots of good information in there.